Okay. There we go.
Oh, wow. Great. Let me just mute.
Yeah, that's what I do. I use a phone
Oh, I look
here.
really big.
I do the computer. Well, I got other things when I go over and do the tabs. It'll go like to show that. So it'll be perfect.
Okay, cool. No problem.
All right. Okay. Hey, we got Jay Bridge on there. Welcome, brother.
Oh, excellent.
Okay. All right. Just going to do a little meet and greet here, beginning at this, I guess you could say. Going to let people come in for the first few couple minutes. Guys, we have a special guest on here today that I was really excited to get on the channel. It's our buddy Tony, Market Moves, man. This guy has been phenomenal with his videos. He needs to get more love. He needs to get more subscribers. So I wanted to bring him on the channel. Has some of the best charts, some of the best DD, some of the best analysis on the whole dividend and the torchlight failure to delivers. So yeah, we're gonna have a lot of people in here getting to know who Mr. Market Moves is today, because this man needs to be known. All right. So we got 30 some people hopping in here already. So I'll let you do some of the comments. If you want to read some of the comments out there, Tony.
Oh. So, yeah, so we see a lot of positive comments here. It says, hello, Chartman. Yeah, the backdrop is from the last time I was able to go on a vacation since the pandemic. So I was over in Disneyland, actually.
Nice.
This is the view from the hotel room. So it's
that's a beautiful view from the hotel room.
Yeah, it's yeah, it was really nice. We got to I actually went there on between Christmas and New Year of 2019.
Okay.
And I didn't realize the pandemic was going to happen and that we were going to be shut down forever.
A few months later, yeah, everything happens.
Yeah.
All right.
So at the time I went, I thought, wow, this is pretty expensive. But afterwards, I was like, wow, I'm really glad I went.
Yeah, definitely. Yeah, the first trip, well, when the pandemic first started, we did go down to Myrtle Beach, South Carolina. I want to say around July of 2020. And it was nice because it was dead. There was like
nice.
Nobody there. All right. All right, we got Carl here, says, thanks once again, Terry and Tony. A follow of both of the shows. All right, that's what we want. We got Jenny saying, I haven't been on vacation since 2018. We're hoping that'll all change. A little speculation on the whole Rona situation. We got peak Rona numbers right now, and a lot of people's predicting that there's not many more people to get infected. Pretty much the bulk of the population has been infected. So we're hoping February, March, April, the numbers will start to slowly decline. As we hit into the summer, it'll just plummet down completely, hopefully. And this can hopefully just be like the yearly flu kind of deal. So that's what we're hoping. All right. So real quick, just a quick recap here as people join in. If you don't know who this is Market Moves. And actually, I want to go put your channel link in the comments of this video, because people need to go subscribe to your channel.
Oh, great. Thanks.
All right, here we go.
Yeah, I don't normally show my face on the channel and it's mostly just charts and slides.
Yeah.
Because I figured you can just watch that instead of me.
Yeah, so this is kind of good that people will actually get to see you in a sense. So
at Tires Plus, you're in the driver's seat.
And there we go. I'm just putting, just going to put your channel link in the pinned comments. That way people can go subscribe to you.
Yeah, so in case you weren't wondering, I am a real human being.
Yes. You're not George undercover on us or anything. There we go. And let me get that pinned message. All right, perfect.
Oh, nice.
All right, guys. So in the pinned comment here, you can go subscribe to Market Moves. I'm going to highly suggest that you go watch his videos. We're going to go over some of his popular slides from the videos that I have watched. I pretty much watch all of his videos, but we're going to go some of the key ones here in today's video. So I think one of the first things I'm going to do, let's see, let's start with this one. So I want you to kind of just explain to the viewers this chart here you made that you're seeing on the screen, and just kind of go over details of everything behind it.
So this chart started as a result of a spreadsheet. So originally, what happened was I saw this video from Roller Pigeons where she was describing how she actually calculated how much she thought the MMTLP how much that dividend would be worth. So I said, that's, so when I was listening to it, I was like, she really knows what she's talking about. So I decided to back up the video and actually make a small spreadsheet out of it. And I actually put the numbers in, and I said, this actually makes a lot of sense. And so I wanted to show this to some friends of mine who meet on Saturday or so. We regularly meet to talk about stocks and whatnot. And so I was talking to them, and I said, hey, you got to check out this, this Roller Pigeons person. She knows what she's talking about. And I put up this chart, and they said, hey, that's really pretty good. And some friends of mine basically said, hey, we'd love to have seen your charts, but we missed our Saturday morning meetup. And so what happened was I said, okay, I've got a YouTube channel. I can stick it on YouTube, and you guys can catch up on it. So that's where this chart originally came from, and it came from an $80 price for oil. And her take on it was that it's not everyone when they talk about the price of oil land being sold in Texas, they look at the number of acres and all that. And her take on it was, it's not really the number of acres, because you can buy acres anywhere. It's the fact that there's oil in the ground and how much that oil is worth. So what really matters is how much oil is in the ground and what the price of oil is, right? So those are the two factors that only really matter. And that's what her calculation broke down into. And that's why I thought it was revolutionary, because everywhere you go and you look at numbers that are reported by the Wall Street Journal or whatnot, they'll always say, oh, there's 200,000 acres that were sold for, $9 billion or something like that. And it's like, getting from the number of acres to how much they're worth is really hard to do. But once you look at just the total amount of oil and the price of oil, you can say, oh, this makes sense, right? So when I heard Roller Pigeons talk about how she actually did that calculation, I intuitively thought, this has to be 100% right. So I did that Excel spreadsheet, and then I posted it. I posted it on YouTube, and I saw that she made a comment that said, "Hey, look, there's this ConocoPhillips deal. Maybe we can back test it against that." So I said, "Hey, that's a really good idea." So I took the numbers from the spreadsheet and I just substituted the ConocoPhillips numbers in there. And I was shocked how close it came to being, right? It was like spot on the money. At that point, I said, this can't be just random coincidence. This has to be real, right? So at that point, I took the spreadsheet, which I had it in a column format, and I just replicated the columns going all the way across for different prices of oil. And so you can see that there's not that much variation from $85 barrel of oil to $80 barrel of oil to $90 barrel of oil, right? You still get a fair amount of cash coming in, on the dividend. But for you to get a very low dividend value, you would need oil to plummet in price all the way down to $30 a barrel. And the reason that it seems to have a bottom area around $30 a barrel is because the COGS cost for oil in the ground is $25 a barrel, right? The COGS cost means the cost of goods sold, and that's how much it costs to actually pump the oil out of the ground for most U.S. Drillers and most U.S. companies, right?
Mm-hmm.
So below $25 a barrel, you're not making any money, and it's worthless. So I believe that the reason that that George Palacaro said between $1 and $20 a barrel, I mean between $1 and $20 per share, is because at that time the price of oil was plummeted because we were just starting the pandemic. At one point, oil got down to minus $47 a barrel.
Yeah.
I mean,
Yeah.
it actually went negative, and I was like, wow. So, but any amount of oil that you have that's over $30 a barrel, you're in really good shape.
Yeah, I mean, even looking at
So,
that chart that they're back tested with the numbers against the ConocoPhillips, even a $30 barrel per oil puts you at a $3.94 dividend. That's just estimating. That's still 100% gain from over 100% gain from the $1.30 something we're trading at now. So it's a no-brainer.
yeah. So I came in too late to actually get the Torchlight dividends, right?
Mm-hmm.
So, when I heard about this MMTLP thing going on, and I had no idea what it was because people were thinking, hey, maybe it's a Torchlight shares, maybe it's not. I saw videos going around saying, hey, don't sell your MMTLP shares. I immediately said, I don't know what, I have no idea what this is. I'm just going to throw some money at
Yep,
it.
yep,
And I hope it's the MMTLP shares. I don't know.
yep.
And so, yeah, so I bought a bunch. And I think I'm still in the process of, so right now I've got a fair amount of MMTLP shares. I've also got metamaterial shares. And every time I think about buying some more of whatever other stock, I come across this, I like think to myself about the chart I made, and I said, it makes sense for me to just buy more MMTLP or to buy more metamaterials.
Yeah, that's kind of a dilemma even I'm in myself with looking at this MMTLP. There's a lot of great small cap growth stock that are just down like anywhere from 30 to 80% right now. I mean, great stock.
Oh yeah,
But
huge.
even if they, in a sense, 2x and go up, back to, double their price now, like I'm going to say like SoFi, great growth company stock trading like $13, $14. Even if that doubles and goes to 26, 28, that's still, double your money. I think there's a
Right.
higher chance that at buying MMTLP at $1.30, $1.50, that I could 2, 3, 5, 10, 20x my money on this preferred share. So that's kind of the dilemma I'm at, where there's a lot of great growth companies that I do want to buy, like ChargePoint, GGIP, Polestar, just a lot of great companies out there, even possibly Neo and Lucid, if the valuations become right. But I just don't see them having more growth than what this preferred share potential has, in my personal opinion.
Yeah, so I forgot to say that. So I always start off all of my videos with saying that I'm not a financial advisor.
Yeah,
This is not financial advice. This is just like, for educational purposes only.
Yeah.
But yeah, personally, for me, I tend to look at that stuff. There are a lot of really good opportunities. I do have a ton of MMAT shares as well too. So my thinking was, in like one of my last videos, my thinking was that suppose I and a whole bunch of other people decide to just buy MMAT with the profits from the MMTLP shares, what would happen then? So I just crunched the numbers in, and the numbers actually work out really good thanks to the shorts, because they shorted the hell out of MMAT, right? I mean, it's down insanely low numbers now.
Yeah.
And that means the market cap is pretty low. So you could actually buy. So if they had any kind of a dividend, we would basically be able to buy the whole company multiple times over.
Yes. And I think I have a chart here that I'm going to pull up for people from one of your videos that I want them to just see. This chart right here. I think this might have been the one, or no, but this was the price per barrel. I don't think this was the one. I got to get the right chart you had up in your video. You did that video where you had the reinvesting.
Oh yeah. I think that was the last video, or the previous to last. No, it's a previous to last video. The last video was about the update that came out just on Friday.
I think it's Yes, this one here. What if the MMTLP has a really
Come
good
to the show.
dividend?
Yep.
Yeah, this one here. Let me see if I can pull up this chart that you had here. Here you talk about doing the math against roller pigeons there.
Mm-hmm.
And all right. Can you see that chart there?
Yep.
I think that might be, that's if we reinvested 25% of our dividend, I believe. Let me blow it up here.
Sure.
So yeah, this is the one if we reinvested 25% of the dividend. Let me hit play here and what it could do, I believe, to the dividend. But I'll kind of let you talk through this here a little bit like you did in your video.
Yeah, sure. So I figured not everyone would invest 100%. Personally, I'm probably going to invest close to 100% back in. I'll take out the original cash, so my overall cost will be zero.
You're gambling with house money.
Yeah, basically, exactly. So I would just throw it back in there, and so I look at the total dollar amount of the entire of the entire sale, and what metamaterials would pay for the dividend itself to everybody, right? So I just looked at that dollar amount, and I took 25% of that, and that's how I came up with the 1.6 million? 1.6 billion.
1.6 billion.
Yeah.
Yep.
Yeah. So then I go down a little bit further. Let's see.
There we go.
Yeah, and I look at the cost of MMAT in terms of dollars per share, right?
Mm-hmm.
And the number of shares outstanding. So this was a 228 per share, right? It's like 213 or 214 now. So it's even worse.
Yeah, it's even worse.
So you could potentially get something like 700 million shares out there. And we know that there's not 700 million shares. There's only 281 that was actually created, right?
281 million, yep.
Yeah. But of the 281 million, you've got insiders, they're not selling.
Yep.
And institutions are typically, they hold their stuff for such a long time that they don't sell really, right? They'll sell it, if it goes up dramatically, which left 181 million or so, right?
Yeah, 188 billion shares available to buy MMAT, yep. Which means a negative,
so that means,
as you see there.
Yeah. Yeah, so there's a net negative, right?
Yep.
So the general thing that people will say at that point is they'll say, hey, look, you'll never be able to buy this because the price will go up, of course, right?
Yep.
And that's normally the case. You start buying something up and there's nothing left, the price goes up. But we have an interesting phenomena with the total number of shares outstanding right now, that there's probably more shares sold than exist. We have market makers that are making the shares available. So we could actually probably wind up buying a large portion, if not all of it.
Yeah,
right?
Exactly.
Many times over. Yeah.
All right.
And at that point, I think we're in really good shape.
Yeah, this was your calculation at 25%. And I'm just going to put up here, I think. So right here.
Yeah, So if you keep going, I actually did it at 12% and 7%, right?
Yep, 12.5% and 7%.
Yeah.
I don't know if you can see the screen there. I got your chart up there so everyone can see it of your breakdown.
Mm-hmm.
Yeah, so there you can see, guys. He went over the 25% there at the 228 strike. Considering now we're trading at 214, so we're actually going to be able to purchase more shares of MMAT because we're down 14 cents. But even going off this 228, let's say we get a bounce before all this happens. I mean, at 12.5% on this calculation, there's still going to be a negative 167 million shares at 12.5% of the money reinvested back into MMAT. So this, for example, say you get $1,000 in dividend, you reinvest $125. This is if everyone did $125 of their $1,000. Like, this is what could happen. How many negative shares on the market would be that these shorts are going to be forced to cover?
Oh, yeah, it would be huge. So, personally, I mean, so because it went all the way down to like 7% and you're still negative.
Yep, negative 10.7 million at 7%.
Yeah. I'm thinking this could be the next, like, GameStop numbers, right? So...
Yeah, this is a very phenomenal video, guys. Like I said, I have Market Moves YouTube channel in the pinned comments of here at the live stream. Make sure you go subscribe to this man and go watch his previous videos. He only has 500 and some subscribers. So there's a lot of people that probably follow my channel that has not watched this man's videos. And you need to go back and watch all of his. I'm telling you right now, it is worth your time to go back and watch these calculations and these charts. They are phenomenal. What else did I want to say here? Oh, yeah, I'm actually myself looking to purchase more MMTLP this week. I'm looking to get some money in my Fidelity account. I'm thinking I had options. I actually had those MMAT1 options. And I'm thinking about letting it expire worthless. I'm just going to call it up and actually exercise it. That way, then, I'm still getting the MMAT shares. And I'm not letting it go worthless. I'm actually, exercising that contract and making them give me those shares. And then whatever money I have left over, I'm going to buy MMTLP with the remaining of that. So that way I'm not letting that options contract expire worthless. I'm forcing them to give me the shares. It's just, so if everyone did that, it would create a little bit of, they have to give you the shares. So I'm just going to do my part and buy it up and buy some more shares. So I'm going to bring up here. Yes. Oh, go ahead real quick. Go ahead.
Yeah. So one of the things I was curious about is we know that in the GameStop realm, people are DRSing their shares and all that. And so I don't know the answer to this, but what I'd like to know is there a way to count the number of shares that have been registered in computer shares or something like that? And if that's possible, then that could also so there's a whole bunch of things that could possibly trigger a large price increase, including a large dividend payment, the fact that people could DRS their MMAT shares. It's just, the fact that you got glucose wise coming out. So there's not to mention Sekusiki, I think, is trying to cover Tokyo with with 5G antennas.
Yeah. I don't know if you've seen that whole breakdown of George Saturday night on StockTwits. He was on there for, I'm going to say, close to 4 hours, maybe over 4 hours, answering us retail investor questions. That says a lot about the CEO to take a Saturday night out and spend 4 hours on StockTwits just replying back and forth nonstop. And I believe there was couple of things I do remember. Couple big ones I remember from the whole thing. I got to read it again and just try to remember some of the key stuff. But I want to say Real Duke Silva asked the question, have we talked to I want to say smartwatch makers? And George replied back, more than one. So I would assume Apple and Samsung's all going to be in there, but we had non-disclosure agreements. We can't say who it is. So I do believe with George's lot of hints, the cryptic messages of the Apple, I do believe that there's probably something going on with Apple, just that we can't say anything. So time will tell on that one. And the other one that George made a comment on was about the GlucoWise. And he says, if we get the FDA approval, bye-bye market cap. I love it.
Yeah, the whole thing is that there's a ton of... So you've got this sign behind you that says, "In George We Trust."
Yes.
And George is, just the fact that he was on StockTwits and talking for 4 hours, about stuff to retail, right, which is us. And so I saw the Sterling Stocks interview, and I was really impressed with George. So I tend to read body language, see what he's like and all that. And he strikes me as an honest guy that I could trust, right? The AMC CEO, I don't know, not so much. But George, you look at it, a straightforward guy, right? He's trying to do the best he can for his shareholders. He's like the perfect CEO as far as I'm concerned.
I agree. I don't know when I first started putting this in the back of my videos, but I know it's been up there a long time. I'm going to say at least 4 or 5. I don't even know how long it's been back there, but I've been putting it up pretty shortly because I kind of came into MetaMaterials, well, technically Torch, right at the whole ending of this merger thing, the whole preferred share dividend. I came in, I'm going to say mid-June, and so I was like a week or two before the whole merger took place is when I got in. So I wasn't really too knowledgeable on what we were even getting into. I was just kind of understanding what I was getting ready to invest in. I saw there was a lot of hype, a lot of excitement around it. That's what got me to start covering it. But as time has went on, and I've been doing more of my research and more of my DD on it, and just realizing what we have here is something special. That's why I keep adding to my position. And I know a lot of people was upset that the MMTLP got put to the market, but I kind of look at that as a blessing in disguise, because I didn't really have a large position of the preferred share because I came in like you, kind of late to the game when I came into this. I wasn't an OG torch person. I came in like mid-June, so I only had 2 weeks, and it's like, I don't know if I'm going to fully say I'm all in after investigating, doing deed on a company in 2 weeks, so. So I am, in a sense, glad that they had this, and then whoever did it, it is wrong. Yeah. I know it's wrong and shady, but I am thankful for whoever did it, because I am buying it up.
Yeah, so I think that they did. So I think that the reason that they did it is because there's probably a bunch of people who were, who owed these who owed the Series A preferred shares. So they had to try to get out of it some way, and the only way that they could get out of it is by arranging a symbol that you could sell, that you could tie to that Series A preferred shares, right? That way, they might start selling some to actually establish a price, and then they probably hope to buy a lot of it back, right?
Yeah.
But the whole thing is that I don't know that people would be selling them, to be honest. I mean, I think that so when you look at the stock price action of MMAT and the stock price action of MMTLP, MMTLP is really stable. Because, yeah.
It's the only thing in this market, we're not down 50, 80% right now.
Right, exactly, yeah. So I started buying MMAT up around $6, $7 a share or something like that. So, and I kept buying all the way down. And I'll probably wind up buying some more MMAT just because it's so incredibly cheap right now.
Yeah, it is.
But, yeah. So
I think I picked up more myself. I want to say it was Thursday or Friday. I grabbed a couple hundred more shares. I just couldn't. I actually got my cost basis down now under $4. It was nice to see the cost basis in the threes. So that was kind of nice. It took a long while to get there, just constantly averaging down, but finally got my cost basis into the high threes. Like I said, I still feel the pain with a lot of the retail out there. I have disclosed that I'm down, 50, 60% as well. I'm down just as much as anyone else out there. I think I have like a 395, 398 average cost. So there you go. That's what I'm down. We're trading at 214, and my average cost is like 398, 395. So that's what I'm down. Just to put it out there. I feel everyone's paying. We're like, oh, we're down. This is a scam. George is a bad CEO. He's like, no, he's not. It's just the whole market. I'm down with you guys, but I'm not out here complaining. I'm still rocking the In George We Trust back there because, like you said, body language and things like you could pick up on these things, man. You could just truly pick up on these things.
Oh, yeah, he's a straight shooter. I mean, it's just so obvious.
And the one thing I could make a quick point, and we'll go to one of these next charts here. When we talked about the Sterling interview, and when Sterling asked about the dividend, and George made it a point he could have just let it go and let Sterling go into the next question. But George stopped and said, I'd like to make a comment. He actually said, I want to make a comment on the dividend. And
that was huge.
That was huge, because if he didn't do that, they probably just would have let it go because Ken wasn't going to say anything. And George led into the conversation, the dividend, and that brought in the next couple minutes of awesome information that they gave about the dividend.
Yeah. And it also gave information that George cares a lot, right? I mean, It's not as though he doesn't care. He actually cares a lot. It's on his mind. He's a scientist, right? That's where he comes from. That's his background. But he understands how to, he understands investment and investors because he's also an entrepreneur.
Yeah.
So, he knows that, when you promise something to an investor, that you have to keep reinforcing the fact that, that you're there for them and that it's on your mind. You will make sure that happens. So,
yes, absolutely. Let me pull up one of these next charts here, and I'm going to let you kind of explain it to the viewers here. Let me see which one I want to go over.
Sure.
I'll let you go over this one here, the torch failure to delivers that we got here.
Okay.
Which is crazy.
Sure. So so this is a zoomed in version. So what I did was I went to the SEC website and I just downloaded their zip file of failures to deliver, right?
Yep.
And then I just extracted out the torchlight information, and I said, okay, let's make a bar chart of it. Let's see what it looks like. I really didn't think it was going to be this crazy. So, I mean, personally, I get more surprised at looking at my own charts than anybody else.
I'm sure.
So I was totally shocked. So a couple things shocked me is that, yes, you got the huge spikes up. They're gigantic, right? You got like over 10 million failures to deliver here.
Yep.
The other thing that shocks me is the fact that you got the huge spikes down. Somehow they covered, it seems, right?
Yeah.
But you can't see so normally when you think of people covering, you think of, oh, yeah, they're buying back the shares. So there should be buy pressure, right? You look back at those times, there's no buy pressure there, right?
Yeah.
So they covered in some way that resulted in them appearing to cover without buy pressure, right? So to me, that means they're doing something hunky, right?
Yeah.
They might be doing something with with the options market or something like that. But the fact that they dropped that down to near zip is crazy.
Yeah.
Yeah.
All right. So there was this other one here. Yeah. So this chart here as well talks about it. It's another one laid out. Looks like it goes back from I guess it's breaking down from January up through June as well. And this is a nice, and this chart here, as funny as it is, now I don't have the Ortex platform. I use Fintel, but
Sure.
I believe when Uncle Smokey did his videos, and I want to say Sterling as well, and they pulled up the Ortex data, and it showed Ortex still showed the torch failure to delivers on Ortex. It looks exactly like this. I mean, like the chart you made is just so amazing that it resembles like 100% of Ortex, a premium paid platform that you were able to go in and make the similar exact chart by getting that data. That there to me, man, it's just truly amazing that you were able to do that. I actually wish I had one of them old torch charts from Ortex because I could pull up a comparison because it is just identical. Like I remember seeing these last couple days here, and it's just like yours is spot on with Ortex, and that's just truly phenomenal.
Yeah, so the thing about my videos is that I show you how I make the charts. I don't just like say, here's a chart.
Yeah, exactly.
Right? So you don't need to trust me. You can do this yourself.
Yeah.
So I downloaded this data from the SEC, and I just downloaded it and processed it. And I was literally surprised at what I saw. So at the start of the year, there was a ton of failures to deliver.
Yeah.
Which to me implies that there's a ton of shorting going on. And so you can't tell how much is being shorted by the number of failures to deliver because they just make the numbers so that there's no direct correlation. But something wonky is going on at the start of the year.
Yeah.
And then suddenly it gets really quiet, right?
Yeah.
And then by the end, there's these huge, gigantic spikes. So, yeah. So something wonky was really going on at the start of the year. They found some way to deal with it towards the middle of the year, right?
Yep.
And then huge spikes. And that's when they, did their merge.
Yep.
And the merge is really interesting at that point. So, yeah. So like you said, with the MMAT1, it could be, so after you made your videos about MMAT1, I wanted to see if I could pick up some, some preferred shares. And I was looking at trying to do that. And it was just when I was about to do that I heard about this MMTLP. So I wound up buying that instead.
Yeah.
But yeah, the fact that you got those failures like that implies to me that there's a ton of money still waiting, to work out.
Yeah. And I think a little bit of the theory of that is that I believe that merger happened early because it wasn't supposed to happen, I want to say, till that Monday or Tuesday. But the merger happened like on the Thursday or Friday, and they trapped the shorts. They closed the merger like before the weekend. And that's what they're saying about the shorts are trapped because Usually they try to close out their short positions when something like this happens. But as we know, metamaterials like to surprise people. They like to do things a little, like we said, they're announcing the spinoff or dividend in March. But it wouldn't surprise me if they come out earlier than that and do something, because I believe they did the same thing with this whole Torchlight. Yeah, we're going to do it on end of here, but they cut it a day early. And I think there is shorts trapped. That's where that whole failure to deliver thing is saying. There's a lot of shorts trapped in this. And it's ironic of how many, I guess we call it ambulance chasers are out there right now trying to beat this stock down, because these shorts are paying huge money right now because they need to get this stock down because they know they're going to be forced to cover it.
Oh, yeah. I mean, the ambulance chasers are crazy, right? I mean, Kerrisdale Capital comes out of nowhere and they announce that they're shorting metamaterials. And then the same exact day or same exact hour, you got all these lawyers that come up saying, hey, do you want to sue metamaterials?
Yeah.
It's like, no, I want to sue Kerrisdale Capital.
Yeah, exactly.
So,
and I have seen like other stocks that I've did videos on, other stocks that I have covered. There is these ambulance chasers out there. I mean, you may see one or two articles, but this here is a whole new level of how many of these not fake, but the lawyers are out there doing these lawsuits and things. It is like times 10 on metamaterial stock of how many of these are actually out there.
Yeah, I think they're trying to cover up any positive news articles with so many of these ambulance chaser announcements that, like, I don't know, they might be hoping that people will not see any positive news, just covered up with announcements of lawsuits or something.
And I want to say on Friday, when they put out the press release of the Series A preferred share, it wasn't even an hour or so later, they already had one of these lawyers come in and put one out after that. So it would bump down the newsletter from metamaterials. And I'm like, what the heck? Because I was like watching this, like I was actually reading the article at work. I clicked on it and I was reading the article. And I think like an hour or two later, I just went back and checked the stock price at work. And I noticed that the preferred Series A article wasn't the top article no more. It was shoved down because all these lawyers were posting, claiming these fake lawsuits.
Oh, yeah. Would you like to sue?
Yeah, exactly. So like 2 or 3 of these came out and bumped that newsletter almost out of like the thing completely. And I'm like, what the heck?
Yeah, I think that's what they're trying to do. I think they're trying to just like inundate the news feeds with their own, lawsuit thing, right? And so you won't be able to find any news. That's the craziness of it, right?
Yeah, exactly.
Yeah.
All right, let's see what else we got here.
So yeah, I think Kerrisdale is in trouble too.
Yeah, so, I think they're a part of it.
Yeah.
I'm going to see if I can find this video I posted. It might have been a while back. It was an interesting... let's see if I can find it here on my Twitter. But it was a 1 to 2 minute video, I want to say. And it's talking about where we were talking about earlier of how many shares is out there. But even if you buy up the whole float, how they can still trade these naked shorts on the market. And I want to find this video and show it to you because I'm not sure if you've seen it or not. And I know I posted it.
So I've been trying to figure out how many shares might be actually out there, right? I mean, I'm hearing that there might be 1 billion shares of MMAT out there for all I know.
That is possible.
Yeah.
All right. Actually, yes, I did find this clip. And I want you to kind of listen to this clip here. And this is a wild ride. This guy bought 110% of the shares.
Oh, I heard about that.
Yeah, he bought 110% of the shares outstanding, and there was still like shares being traded, and he owned the whole float plus more. How's that possible?
That's insane.
All right, yeah, I'm gonna put that up here because it is kind of just ironic. We'll play this here because maybe there's people on here that hasn't seen this yet. But let's watch this.
No, that's a really good clip. That's really amazing.
All right, here we go, guys. We're gonna watch this 1 minute clip.
March 2005, the Senate Banking Committee confronted then SEC Chairman William Donaldson with a story about Frank DeBrookie's company, the Nevada-based real estate holding company Global Links. An investor named Robert Simpson had set out to prove that small companies were indeed frequent targets of abusive naked short sellers. Simpson placed an order for $5,000 worth of stock in Global Links. That got Simpson ownership of all 1.1 million Global Link shares in the market. Not some of them, all of them.
There were no shares available to be borrowed, and yet in 2 days there were over 50 million shares traded. That's clearly something that needs work.
I was absolutely blown away when I bought 1,282,050 shares, which equated to 111% of the issued and outstanding. I just couldn't even fathom that. So it wasn't just crooked, it was Wild West times 10.
Okay, so there you go. The one thing I take away from this interview is that the company only had 1.1 million shares outstanding, but somehow he was able to buy 1.2 million shares outstanding. Okay, it might have been a little miscount, whatever you want to say. But how in the hell was there 50 million shares traded
Extra.
when there's only 1.1 million shares outstanding? Like, I think you made that comment before on one of your videos of that would mean every single shareholder bought and sold like 25
Multiple times.
Yeah, 25 times in a single day, their shares of that particular, like, how's that even possible?
Right.
So that just saying, man, the kind of stuff we're up to, what we're up against here in this market. And that was even back in 2005. So I'm going to say it's even a hell of a lot worse now in the market because, I mean, we all know these big hedge funds, the short positions, they're all in bed probably with the SEC. They're all in bed with the courts. They just pay a fine. And that's what it is. I think I heard like they pay like $1 million fine and they just go on their way. They wipe it out and that's the end of it.
Yeah, I think the SEC is actually afraid, right? Because it's their purpose to enforce laws, and yet if they do, they'll be blamed for a huge market crash potentially, right?
Yep.
And it'll be a market crash because the short hedge funds will have to, they'll have to pay out for all these shorts, and they'll have to sell all of their S&P 500 positions.
Yep.
To make up for that, right?
Yeah, because I think they tell us that retail really can't even move a market. Like us retail investors, we don't have enough money to even move a stock in a sense.
Yeah.
So if we would enforce the laws on these hedge funds, it could be a huge market crash.
Yeah, so there were two things, right? So one of the craziest things is that you have a small company like GameStop, right? Mm-hmm. Which manages to make Wall Street shake, right? They're like, GameStop went up to $480 a share. And it's like, yeah, so it's one tiny company. Why should you care, right? But they have to have congressional hearings about that because it could cause problems for huge, large companies or these large hedge funds who shorted it out the wazoo. So I think people know for a fact that the short position on GameStop is multiple times whatever the float is, right? It's multiple times however many shares exist. But not only that, Goldman Sachs or some large firm came out and they said, it's possible that GameStop could crash the entire market, right? And then they went on with why GameStop could crash it. The fact that, if GameStop had to be paid out, there's not enough money. And it's like, wait a minute, you're talking $4 billion or so. The market's supposed to be multiple trillions. How is there not enough money? Right?
Exactly. I want to say there was an interview once of Charles Payne on Fox Business News, and I believe he said it was his grandson or son or some family member of his that was much younger, and he bought into GameStop and made $50,000. And the kid was like, I want to say 10. No, I'm trying to remember his age, but he was a younger child. I want to say, I don't think he could necessarily purchase the shares, but he might have got his parents or someone to throws like $1,000 in it or something. And he turned a little bit of money into $50,000 at such a young age by buying GameStop when it was down like $4 or $5. And then it shot the whole way up. And
yeah, it's insane.
Yeah, they sold at the top, somewhere near the top, and turn that $1,000 to $2,000 into $50,000 in just the snap of a finger. Mm-hmm. And I believe similar thing. I'm not saying we could squeeze anywhere near what GameStop did or anything like that. It don't need to squeeze that far. It really doesn't.
No, it doesn't. No.
Just a small percentage of that can make a huge difference.
Yeah. So I think GameStop is the stock that will probably wind up, dropping the whole market. But I think MetaMaterials, we're much smaller than GameStop, right? We don't have a huge following. We don't have a huge number of people buying MetaMaterials compared to the number of people who bought GameStop. I mean, when I heard about GameStop at $480 a share, or actually when I heard about it at $300 or so a share, I was like, what the hell happened? So that caused me to investigate it. The more I investigated, the madder I got. And I mean, I was convinced it was true that the market is very corrupt because, But anyway, so the more I investigated, the madder I got. So I started buying GameStop at about, I think, around $200 a share. I mean, because the price was dropping then, right? It hit its peak of $480, and it started dropping in price. And I said, $200 a share, I don't mind buying that. I can throw some money at it. Yeah. And then I kept buying more, and the price kept going down, right? It went down to $100 a share, and then it went down to like $40 a share, right? And that was around when the congressional hearings were, and some congressman said, do you think GameStop is worth $40 a share? And and Keith Gill was there, and he said, hey, I think there's a long-term future for this and all that. You could hear his voice, and you could hear what he was saying. So I said, okay, I'm going to buy a ton. So I bought GameStop at $40 a share.
Nice.
And in a few days, it went up to 100, and I was like, wow, right? So I kept it, and I kept buying more. So I do have a ton of GameStop, so I think it was the whole GameStop thing that got me interested in MetaMaterials, because from GameStop I started checking out the Reddit crowd and whatnot, and I came across this guy Houston Wade, and he talked about MetaMaterials, and he said, and the story he told was a story that was like hard to believe, right? These two CEOs got together and they said, hey, let's merge our companies because we both have a lot of short interest going on. And I was like, this is a crazy story. So it led me to investigate MetaMaterials more, right? And it took me probably about a month or so to figure out what was going on that, because the company had merged. You couldn't get correct numbers anywhere on any website, right? They were saying that there was like 100 million shares, 300 million shares. Who knows what the actual numbers were? It was like really hard to figure out. So, and I mean, at one point it was listed as an oil and gas company, and then a semiconductor company, and then back to an oil and gas company. So it goes back. So I said to myself, these numbers on all these financial sites are totally wrong about what MetaMaterials is. Yeah. So at that point, you're like, at some point they have to stabilize and come to the right answer,
Yeah. I've seen for a while, George was pissed for a while because it kept going back, you said back and forth. And I must say it took a month or two for that to even get changed to say semiconductor. Yeah. And I was a part of the GameStop. I didn't have a huge position in GameStop. I put a little gambling money in it. And I was right there with you. I bought when it dropped down to 40, actually, ironic enough. I put a few $100s in it at 40. It went up to like 100, 120, and I sold out of it. Just a quick swing trade, quick 3x of the money. And I think that was, I can't remember when all that was going on, but I was a little part of that. I was following it. All right. So I'm going to go over the chat here real quick, go over some of the things we got. I want to say thank you, Jenny, for the super chat. We appreciate it. All right. So I want you guys to comment down here if you have any questions for me, any questions for market moves. Real quick, for anyone else that's joined in, I'm going to go over, if you go back and rewatch this stream, Market Moves is the creator of this chart right here. And we had him discuss this chart and how he came up with this information, comparing it against Roller Pigeon's numbers. So if you love Roller Pigeon, you're going to love Market Moves, man. I'm telling you, these two are great when it comes down to this dividend and the charts and the breakdown. These are the charts that we went over in today's video. Just kind of putting them up here for anyone new that joined in. Yes, these are the torchlight failure to delivers. They look very similar to that Ortex data that was out there. All right, so these are the charts that we had him explain. All right, let's see. All right, so anyone have any questions? We got Johnny. When do we get the dividends? Well, that was kind of, in my opinion, released in the press release they just put out. Now, whether it's dividends / spinoff, at this point, I'm happy with either one.
It could be a combination of both.
It could
be. You never know.
I'd be happy with cash and stock because the private company is very intriguing to me. I like being in the private company. I don't have to worry about them shorting it or anything like that.
Oh, yeah.
Of course,
private companies can make a ton of money,
exactly.
too.
And I would be more than happy to let that sit there and do its thing. I want to say someone just posted on Reddit and then someone shared it on Twitter about a Oil Grande. I'm going to see if I can find it real quick. I can't remember who shared it. I'll see if I can get, I might have put a like on it. I'm not sure. Someone, oh, no, I'm not going to be able to find it. Let's see. I don't think I retweeted it. Is it under my likes? No, it's not. Darn it. If someone on Twitter can tag me on that, man. Let's see.
Yeah, so the Oro Grande Basin is like virgin territory, right?
Yeah.
No one has, it's like, it may have a lot more oil than we think, so we don't know. 3.2 billion is like where they last. So I got the 3.2 billion number because, or I came up with that number because there was a, what was it, Nextbridge?
Yes, Nextbridge, yes.
Yeah, so Nextbridge came online for like 1 day or less than a day. And they were talking about the Oro Grande Basin,
Yep.
how they found all this oil, how they were working all this oil thing, and then they went dark, right?
Yep.
So Nextbridge is, I'm thinking Nextbridge is working with is working with metamaterials. They're they may be the secret company.
Yeah.
We don't know. But in either case, their numbers are too exact.
Yeah, exactly.
To suddenly come out of nowhere.
And the pictures from the Nextbridge, people, I believe Sterling and other viewers took the pictures from the Nextbridge site and compared them 100% to the Torchlight site. So that was very interesting. Like the placement of certain equipment is the same placement from the Torchlight website. So that's why I think
it's exactly the same.
Exactly the same, unless they're using that as the generic picture and trying to trick everyone. But I do think that it is probably highly likely it's going to be Nextbridge.
Well, it's from a different angle, so I think it's a real picture.
Yeah. I did find this post. It was actually by Metamaterial News, and they posted here. The source came from this Reddit, and it was a Permian Basin oil company. PBT is a good comparison to Oilco. Yeah. And here's this. They say Permian Basin Oil Company is a good comparison to Oilco. Both are producing from the same location. The value of PBT was $2 and it's $14 now.
Yeah.
And here is the chart of this PBT oil company going from $2 up to $14, spiking.
Mm-hmm. Yeah, and it hasn't stopped spiking, right?
No,
I mean,
exactly.
It started going up. Yeah.
And I honestly don't think it's going to stop because I know you covered in one of your last videos, and I believe even me and Roller Pigeon has covered this, but the banks are predicting $100, $125 barrel of oil, $150 barrel of oil. The banks are predicting oil just to keep going up. So if we even hit 125, that's another 50% X on oil, the price increase, another $40 some per barrel of oil.
Right. And that's all profit, right?
Exactly.
So it costs a certain amount of money to get oil out of the ground. Any increase in price above that is just pure profit. So that just goes directly to the bottom line.
All right. So I'll go ahead. I've got a question here from a viewer then.
Okay. I kind of trust the bank's research too, because they got to know what the price of oil is going to be, because they actually loan out a ton of money to these companies and they got to know that they're going to get paid back.
Yeah,
So,
yeah, I think they learned their lesson back in the housing crisis when they were just saying, "Yeah, this house is worth $1 million," and then a year or two later, it's worth 100,000. I think they learned their lesson on evaluating prices.
yeah.
All right, so I'm gonna go here back to my Twitter. I'm gonna go to the home page. This person has a really good question. Uncle Jack says, "Can you elaborate on MMTLP shares becoming callable?" And I want to put this up here because I shared this on my Twitter.
You made a really good video about that earlier, I thought, where you talked about the callable, the callable nature of preferred stock and whatnot.
Yeah, and I found this, and I'm sorry for whoever did find this from this website, efinancemanagement.com. I believe I saw it on StockTwit somewhere, and I am sorry I forgot the person that I've seen put this up. So I am sorry I didn't give them credit. I feel bad because I always like to give credit to the person that found it. So I do say there is someone on StockTwits. This is the first person I've seen post this. And this is on the efinancemanagement.com website. And it gives you your advantages and disadvantages of a callable preferred stock. So I think kind of the rundown. So we want to look at the advantages to the investor. Us as the investor, we get steady and higher returns from callable preferred shares. And we also get preference in case of payment of dividends and repayment.
Mm-hmm.
And if we look at the disadvantages for us as investors, is disadvantages when the prevailing stock price is much higher than the call price. So I guess that would be if, say, Oilco's trading at $30 and they want to call it back at 25.
Sure.
And I'd be okay with that. I'm not going to argue that they're going to give me 15x my money. I'm not going to squeeze every penny out of them. I want them to, be able to make the company successful and all. So, and the last point we got as the disadvantages to the investor, the issuer had benefits of having choice to exercise the right to recall.
Mm-hmm.
So
but when they recall it, they will recall it at a price that is reasonable, right? They're not going to recall it at like a penny.
Exactly. Yeah. So
right?
If they're saying it's $30, they're not going to call it back for $1 to $2. They're going to give you something fairly comparable to that $30 range, maybe $25, $28, somewhere close, I believe, in the ballpark. And maybe they want to take the whole thing private. And, when they do the whole evaluation and say, let's just say, for example, it is $30. I think oil was, what was it? $83 a barrel. So that would put us, from this chart here you made, in between $80 and $85. We were looking at a $43 to $47 dividend estimate.
Right.
And that's compared off that, was it the ConocoPhillips, the $9.5 million deal you did this comparison on?
So all of this math was back tested against ConocoPhillips, against ConocoPhillips data. But if you look at the price of oil today, the price of oil has been heading upward, and if it keeps heading upward, that's going to be quite good news.
And it is good that we're not officially sold yet. I mean, I'm glad it wasn't sold back when oil was down low, because we'd be here looking, we got even a $5, $10 dividend. We all would have been happy.
I would have been happy, but
we would have been happy at that. Yeah, we would have been happy at that moment. And then we would have seen, I think a lot of memes are out there. It says, the moment I buy a stock, it dips. The moment I sell a stock, it rockets. And that would have been us. If we would have got that $5, $10 dividend back when oil was really low, we would have just been watching oil going up and up and up. And we all would have been like, no, we could have got a higher dividend.
Yeah. So Peter Lynch, way back in the 2000s or 1990s or so, he used to say, "Let your winners win," right?
Yep.
Let your winners run. So because they can wind up, actually making more money than you think.
Yep.
So,
and this is a valuable lesson. I'm gonna speaking of that quote right there from Peter Lynch, valuable lesson I'm gonna give to everyone out there. I was invested in Lucid Motors back when it was CCIV. I bought the stock when it was $15, $20. The thing shot up to $60. I didn't sell it. I held on to it. Then, of course, they come out with the big news, the valuation. It plummets it back down to, I don't know what it was, $20 or $30, whatever it came back. So here I was at a point where I bought a stock at $15, $20. It shot up to $60. It shoots back down to like my average cost. So there I just lost 3x my money. I'm back down to where I had invested into CCIV. So then CCIV was trending flat for a while, and even Lucid was trending flat for a while. And I'm like, you know what? I'm just going to sell out of this position. And I actually took that money and bought MetaMaterials. I'm like, I feel
awesome.
I feel MetaMaterials is going to be better for my money right now. Well, ever since then, MetaMaterials has been dipping the whole time since I've been buying it. But I still love the company. I'm not worried about it long term. But the prime example is I took the money from that stock that I had a high conviction on. I wanted to buy more MetaMaterials because I was doing the videos. I was getting in tune with what was going on. And ever since then, MetaMaterials was plummeting, but CCIV did run up to like 40 some dollars, and again, and now it is coming back down a little bit, 40 or $50 it ran up to. But if I just would have held my money in there, it would have went up. I could have sold it and even bought more MetaMaterials. That's how I look at it. So I sold out a little too early.
Yeah, I mean, so the way I look at it, buying stocks if it's done right, should be a painful experience.
Yeah.
Because if you know why you're buying a stock, then you understand it, right?
Yep.
And the stock price may go up and down. It may fluctuate over time, right? So, so typically what I do is I kind of do a dollar cost averaging, but in a slightly different way. So if I have a certain amount of money that I want to buy a stock, I will first understand the stock, understand what it's all about and whatnot, right? And then I'll spend a quarter of it initially at whatever price it is at that time and buy the stock. And I'll wait because I know the prices go up and down over time based upon just randomness, right? Random fluctuations. Let's just say.
Yep.
And then if the price goes down a bit, then I'll spend another quarter, right?
Yep.
And as long as I understand why I own the stock and why I bought the stock and where I think it can go, I'm okay with it dropping 75%. I'm okay with it dropping 90% because I'll have a little bit of reserve left, right?
Yep.
And at some point, I will probably have spent, the full amount of what I was originally planning to spend. But at that point, I will have done sort of like a dollar cost averaging down.
Yep.
And then as I make more money over time in terms of income, I might throw some additional money at it, right?
Yep.
But at that point, I will have bought stock, and it will be painful because the price will have gone down, right? And if I look at it, I'll say to myself, I lost money on this, but I didn't really because I understand why I bought it. So, and I came up with this strategy because a while back I actually bought some crypto, right?
Okay.
So the way I looked at it is crypto is hyper volatile.
Oh,
right?
yeah. Oh, yeah.
Yeah. So, but with crypto, because it's hyper volatile, I live in Silicon Valley, and pre-pandemic we had a ton of incubators here and whatnot, and so I would occasionally talk about crypto at these incubators. And a lot of people in Silicon Valley at that time, they were very anti-crypto and all that. And I said, and the reason is because it was hyper volatile, right? So I said, look, if you take a dollar cost averaging methodology to crypto, right, you can actually wind up, so I once did a presentation to some friends of mine where if you spent $100 a month just buying crypto, you could make a few $100,000, right?
Yeah. Yeah.
And the reason I picked $100 a month is because that was the price of a cup of coffee. Because it's $3 for a cup of coffee per day, right?
Yep. Yep.
So over a month, you'd spend about $100 on coffee.
That's true. That's true.
So I showed how you could spend like $100 a month just buying crypto, not even looking at the price, just buying $100 worth of crypto a month, right? And then over 2 or 3 years, you might wind up with a couple $100,000.
That's true.
Yeah.
the one I'm currently in is actually Shiba Inu. I am currently down the position. I'm
Sure.
going to say I'm down like 35-40%, but I just keep buying. I throw like what
Yeah.
you said. I don't go heavy into crypto. The reason I like Shiba Inu is because from my understanding of it, I really like the Ethereum network. Just from people that I've watched videos on, and I've been trying to educate myself more on the Ethereum network. I really
Yep.
like the way the Ethereum network seems to run from people's experiences. So that's kind of why I want to be in the Shiba Inu. I think, and I wouldn't mind getting in a little bit of Ethereum as well. But I like the cult following behind Shiba Inu. It does have that army style mentality behind Shiba Inu. And Dogecoin's good too, with Elon now just announcing that you can buy the Tesla merchandise with Doge, and that has blew it up pretty crazy here recently. So I've been just like what you said, throwing $20 into it here and there. Like this week I'll throw 20, maybe another 2 weeks I'll throw another 20. I just keep buying it down, and it just keeps bringing it down. And I guess it's cool that you can throw 20 bucks and get like $500,000 Shiba Inu. It just sounds pretty cool. I got $500,000 of this for 20 bucks.
Yeah.
I watch a lot of videos where they do the Shiba burn, where they have the burn wallet where people go and just keep burning. I know it's going to take a long time, but I know they're coming out, from what I've been watching videos on and learning, they're coming out with video games where you purchase items with your Shiba Inu and it burns it. So that's a pretty interesting concept for Shiba Inu, because there's a ton of Shiba Inu out there. It's way too many coins, and that's why it's down so low. But as they start coming out with these video games, that's where you want to buy your custom skin, you want to buy your accessories in this game, or your weapons and things, it's going to cost you Shiba Inu, but then the game tends to turn around and burns it. So it's like a Shiba burn game in a sense. It'll constantly keep burning Shiba Inu. I think it's a pretty cool concept. We'll see how that goes with crypto in the future.
Yeah.
But I thought that was pretty cool.
Yeah, I mean, I think it's great that you can buy video game, virtual items with crypto.
Yeah.
So at that point, yeah, and it burns the crypto, so that crypto is worth even more. So if you have crypto, that's great.
It's a win-win. It's a win-win. So that's why with Sheeb, I'm just going to keep throwing 20 here, 20 there. Probably, I'm not going crazy. I'm just throwing money that I would waste, like you said, on coffee. Money that I think I may waste on other items. I'm like, you know what? Instead of wasting that money, let me just put this here in my Webull account, and I just keep buying the Sheeb, and just keep, like you said, I'm not worried about what Sheeb's doing now. Crypto can be in a bear market for 1 to 2 years. I'm putting money into Shiba Inu that I would just be wasting on coffee and junk items and things like that. So I kind of feel it's not really gambling. I'm not throwing thousands of dollars into Shiba Inu. But over time, it'll start adding up. And if we get one of those big, huge, spikes again, it can happen.
Yeah, the reason I like crypto is it's what I would like to call a relatively honest market.
Yeah.
And the reason I think it's honest, it's really hard to short crypto, right?
Yeah.
You can short futures of crypto, but you can't short crypto itself, and that's why it's hyper volatile. So, so you'll see people like, So anyway, so I won't talk too much about crypto, but the crypto methodology of buying is what I tend to do with metamaterials and MMTLP and that kind of stuff, right?
Yep.
So and the MMTLP is dirt cheap, right? That's I mean, you could throw coffee money at that as well too.
Yeah.
At this point,
Yeah. All right, so I'm going to open it up for a few questions here. I got Riverview, Florida, say time for Q&A. Yes, it is time for some Q&A. We'll take 10 or 15 minutes here and go over some questions. So you guys put your questions down in, and I'll read them out here, and we'll take some time out and answer some of your questions, and I'll read them out here as we get them in the chat.
Sure.
All right, Matthew says, MMAT price movement this week, up or down?
Oh, I have no idea.
Yeah, I don't know either. I don't know either.
Anyone who tells you they know is lying to you. I'll tell you that right off the bat.
That's true.
Yeah.
All right, so we got a question here from Jay Bridge. He says, Tony, once the divvy is announced, where do shorts cover? Or
Once a dividend is announced, the shorts are so screwed.
Yeah.
So what happens is once you announce a divvy, right? So according to SEC rules, if you announce a dividend, you have to announce it at least 10 days in advance of the actual dividend. So you can't announce it immediately and say, "Hey, the dividend's tomorrow," or the dividend, or like the dividend's in an hour, right?
Yeah, yeah.
So you got 10 days. But during that 10 days, you know that if you bought that stock, right,
Yeah.
that you would get the dividend. So immediately there'll be a price jump of the stock to whatever the dividend price is, or close to it.
Yep.
So at that point, the people who are short the MMTLP, they have a choice. They either buy back the MMTLP immediately,
Yep.
or they have to pay out the dividend to their broker, right?
Yep.
And in their case, so even if they're a big company, even if they're a large short hedge fund, they've got a broker, and they need to buy, and they need to pay either their broker that dividend, right,
Mm-hmm.
or they need to buy back the stock from that broker. If they do either one, it's a massive upside.
Yeah. All right,
Yeah.
so we got another question here from PHE Rhymes with AMC. He says, how does the torch failure to delivers affect us?
Well, eventually they have to deliver whatever that is, right?
Yes.
So the torch failure to delivers have become MMTLP, right? So they need to actually pony up the MMTLP, and if there's a dividend on MMTLP, they need to pay that MMTLP dividend. That's quite obvious.
I'm going to put this chart up here, 'cause since you're asking about the torchlight failure to delivers, this is a chart here that Tony Market Moves has made, talking about the failure to delivers on torch. And as you can see here in this big spike on the 28th, these have not been covered to our knowledge, because Metamaterials closed the merger early in preparation of that weekend. So the shorts never had time to close their positions from our speculation.
Yeah, there's some theories going on about how they may have covered in the options market.
Mm-hmm.
And so there's a bunch of people who are waiting until after the 21st of January. I don't know that would happen or not, but I'm not against waiting.
Yeah, exactly.
I'm perfectly fine waiting till after the 21st of January.
Yeah, absolutely.
Yeah.
We got another question here from Riverview. How do we know shorts whether they covered?
So shorts have two methods of covering. The first method of covering that they'll use, you won't know about, which is basically they are allowed to buy securities of a similar manner and price, right?
Oh.
Which basically means that they have to, so that's in the SEC rules about reg show. So that's a curious statement, right? They could have said just buy back the shares that you sold.
Mm-hmm.
No, they said securities of a similar manner and price. So that means that they could theoretically cover in the options market. But the torch options are non-existent, right? They're going to go away. You've only got those leaps, those long-term options. The other way that they can cover is that they can actually buy back their shares.
Mm-hmm.
Okay. So so when you short something, you're by definition operating on margin, right?
Yep.
What happens is you've sold something you don't have, and so you've borrowed that from your broker, right? And the broker may have created that out of thin air, or they might have borrowed it from somebody else.
Mm-hmm.
So you're on margin, and if the price of that goes up, you could potentially get a margin call, right?
Yep.
So if you announce a dividend that is 5 times what your stock price is, your broker might say, "Hey, we need some money because you need to cover, what the cost of this is."
Yeah.
Yeah.
And I've covered videos before of companies doing these special dividends that are crazy amounts. Of course, I covered me and Pidge talked about the Dr. Pepper had the $103 dividend.
Oh yeah, that's phenomenal.
I also talked about a stock ticker, MIC, announced a $38 dividend. We also had another one announce I want to say $11 or $13 dividend. It was LAUR ticker symbol. It was like an education stock, did like a $13 dividend or something like that. So some stocks can announce some crazy dividend amounts, guys. Just keep that out there. Really
Yeah,
quick here. We got Jimmy asking, is there any certain coin that you would recommend for crypto? Any coin?
any coin. I try not to.
Yeah.
I look at the original. I look at the original Bitcoin. So the interesting thing is, I often get asked this question by people who are, what I call no coiners.
Yeah.
So I like Bitcoin itself, but Bitcoin, as you know, is incredibly expensive, right?
Yep.
So there's this thing called the Grayscale Bitcoin Trust, which you can buy if you have a brokerage account, you can buy GBTC. And so again, I'm not recommending anything. I can't. I'm just going to telling you the story about Grayscale, right? So they're currently selling at about a 20% discount to the amount of Bitcoin they have.
Oh.
So you can get Bitcoin at a discount by looking at GBTC. And so Grayscale wants to make an ETF. The SEC hasn't been allowing them to make an ETF. If they're allowed to make an ETF, they immediately will get a 30% price jump.
Oh, okay.
So
nice.
And the nice thing about Grayscale is that if you buy, if all you care about is making money on the crypto, right, then you can buy it and they'll take care of hosting the wallet. They'll take care of wallet management. They'll take care of insuring it in case it gets hacked, right? So they've got insurance, right?
Yeah.
So if anyone tries to steal their crypto or runs away or like whatnot, they'll be insured.
Yeah.
So as a result, you're perfectly safe there at that point. So yeah, previously I had been telling people that, you can open up a Coinbase account and whatnot, but now I'm telling people that, hey, look, if you were interested in crypto, have a look at Grayscale.
There you go. That's a nice. See, I learned something there. I didn't even know that was an option, so I'll have to take a look at that.
Yeah, in the early days of crypto, Grayscale was selling at a 90 to 200% markup in price.
Oh, okay.
So I could not have bought Grayscale then, but then after they came down, so when Bitcoin dropped to about, when Bitcoin was rising from 4,000 to about 10,000 or so, at that point I looked at my retirement account and I said, I've got I have no crypto in my retirement account.
Yeah.
So at that point I said, I might as well just buy some Grayscale.
There you go.
And I did.
And you can sleep at night. You buy the ETF and you can sleep at night. You ain't got to worry about it crashing while you're sleeping.
Exactly.
We got a good question here, and I think I'm gonna give my answer to it, and I want to hear if you have a different opinion on it. Matthew asks, why wouldn't the shorts just buy a lot of MMTLP? So I'm gonna take my part on this question here. Oh. My personal opinion, when this first got listed, it was listed at 10 cents. So I believe the shorts was probably the ones buying this from 10 cents up to and ran it up to $3. So I believe, I want to say those first couple of days of the MMTLP trading, it was high volume days. I'm going to say it was over 10 million or something volume those days. But also nowadays, I think you get 300,000, 400,000 in volume. That's buying and selling. We have noticed the spread on the buy and the sell is huge, and they're making huge money on the spread. The market makers are making huge amounts of money on the spread of the buying and selling of MMTLP. And I think that right now, even trading at $1.30, $1.40, the shorts don't want to buy a large position of this, because what's going to happen is usually anytime you draw attention and a stock starts to run, you draw in retail investors is what happens. They see this thing like, why did this run 100, 200%? People's going to be intrigued. People's going to start watching videos, and it's going to run it up even more. So I think that they don't want to buy it right now because they don't want to draw attention to it. That's just my opinion. Right. They just don't want to draw any attention. They're going to buy when they have to buy it. That's what they're going to buy. And then you're going to see the price shoot up because then they are buying it.
Yeah. I think that every time that there's a large... So I think that they actually try to force the price down, so they'll do short sells.
Yeah.
And then they'll buy it after they think people have sold, right? So what they want to cause is a panic sell. So normally when you buy a stock, right, you want to buy it in small amounts very quietly so you don't move the market. In the case of a short sell, you want to sell a ton of it immediately,
Yep.
right?
Yep.
So you want to. So I think that's what they try to do, and they try to create what's called a waterfall effect, right? Once they sell a lot, and a lot of people have at that point, and they've driven the price down, a lot of people might be considering selling themselves.
Mm-hmm.
And if they can get other people to sell a ton, then they'll go in at the lower price and just scoop it up, right?
Buy it in. Yep.
But I don't think there's that many shares for them to buy either. That's the whole thing. I don't
Yeah.
think people are selling it.
Yeah. I don't
So
know. Yeah, I don't know how many more is honestly left. In my opinion, I would love to know. I believe when I checked the volume on Fidelity, it shows anywhere from 300 to 400,000, but that just shows buys and sells.
Yeah, but that's incredibly low volume, right?
It
You've got
is.
165 million shares,
That's very low.
and you're only selling 300,000
Yeah.
a day,
I think the
or
last couple
buying and
times
sells, right?
yeah, buying. It shows buy. It doesn't tell you exactly how many buys, how many sells. It just shows the total volume was like 300 to 400,000.
Yeah, but that tells me retail isn't selling.
No,
right?
oh,
No
no.
one's selling. Yeah,
I think the
Retail's
people that
buying.
I think I think we discussed this in other videos, me and the other YouTubers. People that don't really people probably bought this and then dropped out of the stock market completely, and they woke up one day and probably got a notification from the brokerage, or they logged into the brokerage and they saw this money sitting in there at 10 cents, 20 cents a piece, and they said, well, heck, I got money now, let me just sell out of it. And they thought that was the dividend because they haven't been doing any due diligence or keeping up with any newsletters. They probably just dropped out of the market, saw money in the brokerage, and just sold it out and went on their way.
yeah. It's hard to tell what's going on because there's not that much news out there, right?
Yeah.
And when you see something in there, you might look at this and say, "What is this? I have no idea." Okay, I can sell it. Yeah.
Yeah, that's probably what it was. I want to say a thank you to Charles731 for the super chat. We appreciate you, buddy. He says, thanks for having market moves on your channel, Terry. He is very knowledgeable. Yes.
Thank you.
I actually heard about market moves from Roller Pigeon, and she said, Terry, you should try to get, market moves on the channel. I went and started watching his videos. I was just like blown away at what this man has done. So I was trying to find how to get a hold of this man. He was very hard to track down. I didn't know he had a Twitter. I was going through his videos, reading the comments. I was reading the scripts. Like, how can I get a hold of this man? And I forget how I actually got one of your viewers commented about, I think it was one of your charts, and you gave that link to the GitHub. And I think you might have said something about a Twitter. You do have a Twitter, but you don't really use it. So I found you on Twitter, shot you a message on there, and we worked to get this live stream up. I'm hoping out of anything of this interview that we're doing this live stream, that people has got to know who you are. They're going to know your YouTube channel. They're going to get to go now back and watch your previous videos and get a lot of great information on the dividend, the charts, along with the failure to delivers, the video you did on how much the stock price, how many negative shares would be outstanding if we even reinvested just 25%, 12.5%, and 7%. So yeah, a lot of great information on this man's channel. And I think I have, it's in the it's in the pinned comments here, guys. So make sure you go check him out. Let me refresh.
Yeah, so I make the calculations up front for anyone, right? You can check my calculations. You don't have to trust me. So, and you're right, Terry. It's almost impossible to get a hold of me because I really literally go out of my way not to make myself seen or anything like that, right?
People's going to know who you are after today, my friend.
So, yeah, it is hard to get a hold of me.
It was very hard. I'm not going to lie. It was very hard to track you down, but I was kind of going through your old videos and reading the comments. And I think you made a comment back to someone that they could get you on Twitter. And I found that name on Twitter, and that's how I was like, oh, I finally found something. Because I knew I wanted to get you on here and get you some great exposure to people, because I would feel I'd be doing I wouldn't be
Service?
doing I'd be doing a disservice to the community by not letting them know who you are. So I had to do my part and what's best and get them to know who you are and get them to your channel. Like I said, you put out some of the best, you and Roller Pigeon, man.
Thank you.
You two put out like the great information on the dividend. I'm not knowledgeable on the whole breakdown, the charts and breakdown that you two do. I kind of like being the person showing my reaction to it in a sense. I'm kind of an animated character, so I like to just kind of show my excitement for the possibility of what we could get.
So what you do, Terry, is you're on every single day for the most part, and that actually brings a lot of reassurance and information to everybody. So I actually am very impressed with what you do. It takes a lot of work and a lot of energy and effort to actually do what you do. So I appreciate that, just FYI.
Yeah, thank you, man. I appreciate it. It is
Yeah.
I did take a day off yesterday, but usually I'm gonna say since probably June, mid-June, end of June, because I started covering the Torchlight stuff, and this whole Series A stuff happened, and I've been pretty much covering it since July of last year, pretty nonstop. I know that it was a lot of ups and downs in this, man, with the stock price being up, the stock shooting down. And the whole reason I wanted to come on here, like you said, daily, is to keep people's morale up. And I always said, if I can come out in a video and keep one person from selling their stock, I did something good. So when I hear people say that I haven't sold, I've actually averaged down, I bought more because of your videos, that's what makes me go. That's what keeps me motivated. That's what makes me not want to give up and make people miss out on this opportunity that we have with metamaterials and this possible, what the dividend could possibly be.
Yeah, so there was an author called Terry Goodkind that I used to read his books, and he still writes great books. But he wrote this book called Wizard's First Rule, and his second book has Wizard's Second Rule, and his second rule is passion rules reason. And I think that's the way that the markets operate. They operate on passion because people basically panic sell.
Yeah.
And they'll buy after they hear, after they hear amazing news, right? So the market operates on passion, but you can make much more. You can actually do much better in the market if you control your passions, and if you look at and see what the actual underlying idea is behind that company, right?
Yeah, absolutely. I think it was the famous Warren Buffett quote: "The stock market is a transfer from the
Impatient.
Stock market's transfer of wealth from the impatient to the patient." So that's kind of what it is, man. People just trying to keep people motivated, even though we're down here so low. And we were covering the stock $6-7. We were covering it during the whole rise up. But I think there's going to be this story where they start to see things turning around. I believe the dividend's going to be the start. I've said this for a while. I really think the dividend's going to be the start of the U-turn for the stock price, in my personal opinion.
Yeah. Yeah, I mean, so they went out of their way to find this oil. It's been verified with these geologists, right? Greg McCabe is there. He hasn't sold a single share of MMAT all this time.
Yep.
So it's pretty.
And John Berta. John Berta made a comment on his Twitter. He hasn't sold a single share of MMAT, and he hasn't sold a single share of MMTLP. So we got Greg McCabe and John Berta, both Torchlight OGs. They haven't sold a single thing, so they believe in this. And speaking about the dividend, I believe on the Fintel, Greg McCabe has over 6 million shares of MMAT. Now, we don't know how many MMTLP he has. We don't know if he has options that he can exercise, similar to what George and a lot of the metamaterials and insiders can do, where they can exercise these shares for cheap. So trust me, when you hear about people saying a $1 to $3 dividend, that's not going to make Greg McCabe happy.
Oh, no.
We heard George in that interview is that, Greg McCabe's very happy of what's going on. So as a wealthy, smart individual as himself, he knows what this is worth. He knows this dividend is going to be a huge payout. That's why it hasn't sold.
Yeah.
In my opinion, as much skin as Greg McCabe has in the game and as much skin as John Berta has in the game, and they felt that this was not going to be worth anything, I think they would have been a part of the tax loss harvesting. That they just would have sold at the end of the year took the loss, got the tax write-off, and just went on to the next investment. But we heard in that interview that they have not sold. So that's exactly what, that was huge to hear about Greg McCabe. In my opinion, that he did not sell for tax loss harvesting, you know, because if he would have sold and moved on, I would have been a little scared. I'm not going to lie.
Yeah. So Greg McCabe, so on Fintel, I believe it says he's got something like 5 or 6 million shares, but he's also got another 5 or 6 million in Greg McCabe Enterprises or Greg McCabe Ventures. I forget what.
And I'm going to
so he's got about 10. Yeah. So he's got like 10. He's got over 10 million, I'm pretty sure.
Yeah, I think you're right. I'm going to pull it up real quick because I got the Fintel. We'll go to the insider trades here.
Yeah.
All right. So here we go. Yeah, we got GMC expiration. It shows that's 310,000. And then let me see if it shows. Yeah, here's the Greg McCabe right here. 6.8 million shares. Oh, here it is. Petroleum Corp McCabe. 5 million.
There you go.
5 million shares.
Yeah.
Yeah, so he has over 11.8, almost 12 million shares.
Yeah, he's got a ton of shares.
Yeah,
he's not selling.
Yeah, so I mean, George here himself.
He's not selling for a buck.
No, exactly. He's not selling for a $1 to $3 dividend.
No.
George has 3.7 million shares, and we know that Thomas Welch and Ann Lambert, they have that 22.4 million shares.
Yeah.
The married couple, that's long-term investors too.
Yeah. So I think that the dividend is a big deal, and the interesting thing is that when you get paid a dividend, it can be what's called a qualified dividend. So Greg McCabe and his crew care about how much money they'll be spending on taxes, because it can be a big deal, right?
Yeah.
But if you get a qualified dividend, that can get treated as long-term capital gains.
Oh.
And so a qualified dividend, you don't have to hold it for over a year like long-term capital gains. If you held it for the required period of time, which is I think 60 to 90 days, between 30 to 90 days, I forget what.
Yeah.
You get long-term capital gains treatment.
Nice.
So that means you go from, if you make over 400,000 a year, I think it's 440 or something like that. Long-term capital gains means you get a max tax rate of 20%.
Okay.
If you make less than $40,000 a year, long-term capital gains means you pay zero taxes on that.
Yeah.
So.
Yeah.
So.
And I believe
that's pretty good.
Roller Pigeon said in her video that Greg McCabe or was it John? I'm gonna say it was John Berta in previous. John Berta in previous interviews, the Torchlight interviews, that he wants a non-taxable event.
Yeah.
Because
taxes are huge.
Yeah, exactly. Especially for as many shares that they have. It's a huge deal.
Well, I live in California, so that I pay 54.1% interest. I mean, I pay 54.1% taxes total.
I learned about the California tax actually through Meet Kevin. Meet Kevin lives out there in California, and he talks about taxes, and I'm like, holy smokes, man. California is no joke on the taxes.
Oh, yeah.
It's unreal.
Taxes are pretty high. Yeah.
All right. So real quick here before we get ready to wrap up everything, I just want to say, here's this chart again, giving dividend prices. And as you can see, oil is in between the $80 and $85 barrel per oil. Guys, it's putting us around a $43 to $47 dividend by this chart. Like I said, if you're not subscribed, here's his YouTube channel. It's in the pinned comments. Once this uploads, I'm going to pin his YouTube channel in the comment section as well. So it'll be here in the live stream comment section. It'll be in the videos comment section. J-Bridge says, what is his Twitter? J-Bridge, if you go to my Twitter page, I have his Twitter on that post I did.
It's Tony's Twits, I believe.
Yeah, it's
Tony's _Twits.
Yep, Tony _Twits right here, guys. Yeah. So give him a follow on Twitter as well. Give him some love. So like I said, I was super excited to bring him on here, bring him to the a lot of people's going to get to know who he is after this video, which is awesome. So just want to say thank you all for joining, and we'll be back if there's any other craziness. We'll see about getting back on here later on. We get more information. So any last words, man, before we get off here?
Nope. Thanks for having me on.
All right, guys. So that's going to be it for this video. So thank you all for joining, and we'll see you the next time. Peace.
Bye.